Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, just a quick caveat as per usual. There is no investment advice. I'm not an investment advisor, no financial advisor. Anything said in this piece is an opinion only. All money belongs to you. It's in your account. It's your traded, your profits, your losses, whatever the case may be. It's only an opinion on markets. Okay, let's get going. So yesterday, inflation came in at 8.5%. What I've been saying also for the last few weeks, likely that inflation over July and August will go down purely on the back of oil prices. Oil prices and soft grains also, to be taken into effect, have actually come down. So commodity prices, soft grain prices, oil prices, the whole commodity sector where the world depends on has actually come down in price over the July period, and that's going to impact significantly on inflation. Going forward in August, you can expect inflation to fall slightly, even though underlying inflation, the fiery furnace of inflation, is still there and still around about the 20% level based on the cost of living and the daily living expenses. You can expect that the reported inflation, which is based on a narrow basket of goods, to go down. It's misleading because it gives you the impression that inflation is going down, but yet gas prices and heating prices and food prices and clothing are all going up much more than 8.5%, and that's why it is misleading. But in September, I expect the reported inflation to be much higher than it is. So I expect it to be around about, from September onwards, to go to more than 10% inflation per year. Now, looking at inflation, when the numbers came out, the markets jumped up significantly. They loved it. As far as they're concerned, investors saw, wow, it's the end of inflation, it's the end of interest rate hikes, the Fed won't raise interest rates in August, everything's going to be hunky-dory, we're back to a bull market, back to Gan Eden, everything of Garden of Eden, everything's absolutely beautiful. Well, that's not the case, because there is a major liquidity crisis, and most of the corporates are in trouble in reporting lower and lower profits. We just had Nvidia, the semiconductor chip, came out with a warning, in Micron Technology, which is quoted MU on the stock market, came out as a warning. And also you've got multiple other companies. You've got Green Bean in the States, which is also now going to lay off 5%, the salad maker, because of the lower demand. So you're going to have a potentially increase in unemployment in certain sectors. Overall, there is a lack of manpower. But let's go back to the inflation. So I expect oil to rise now that the news is out. The oil probably to rise in September to over $100 a barrel, probably towards $120 a barrel, and also the soft grains and also other commodities to continue rising from September as the winter months set in, and that will push up inflation higher. So in this particular market, what you should be looking to do, in my opinion, is selling into the rally. So the market's bounced significantly. It can't hold on to those gains because underlying liquidity is not there, and therefore, as one of my colleagues says, May, you got it right at the beginning of the year, be getting it wrong. I said that's true. Everyone said I got it wrong at the beginning of the year. Turns out I got it right. I'm still sticking to the fact that the markets are far too high across the board, need to be sold off. Looking specifically at some of the asset classes, you've got the cryptos, which bounced hugely yesterday, got Bitcoin well above 24,300. And that looks like a sell at these levels. Again, the underlying problems have not disappeared. We haven't gone into some fairy wonderland that everything's okay. So Bitcoin at 24,500, 24,300 looks like a sell. Looking on the foreign exchange markets, dollar yen came down crushingly yesterday with those inflation numbers. Again, at this level, looks like a buy. The euro dollar also went up, looks like a sell. Selling the euro, sell on the bounce. So there will be further dollar strength. It's not over, and there will be towards the end of the year to see the dollar again pick up as those inflation numbers pick up in September, October, November. You're going to see a much stronger dollar. So here is an opportunity to sell into the market. I'm emphasizing that specifically. We're looking to buy oil, looking to buy gold, looking to buy the dollar, looking to sell the euro, sell the pound, and also sell the yen. So dollar yen to rise as inflation will rise from September. Looking at bonds, obviously the yield on bonds went up dramatically because bonds were sold off as investors sought higher risk assets. That's more or less it for now. We've got PPI out today, which is Producer Price Index. That is the inflation at the producer level. Again, I expect that to be higher than expected, but I also expected retail inflation to be higher than expected. I was wrong on that. Could be anyone's guess. Mayor Walensky, driving markets. Keep in touch. Have a good day.